Mr. Fenton.
Happy Friday, my friend.
Yes, happy Friday to you. You well? You had a day off?
I had the day off, mate. I think that just having a chat with the team throughout the week and various other business owners and those of us, even when we're in Victoria, where there's a bit of a mentality where we're saying, we're not going to take time off during COVID because you can't do anything. But I think there's also a realization that we need to separate our brain from our work from time to time. So I thought I'd lead with by example, and mate, I'm quite refreshed. I must admit I don't have a huge amount to say because I haven't really been studying today, but I'm hoping that I'll just tune in the dark side of your of you today, mate, because I got the memo about the grey shirt and I just went to the dark side, mate. So
mate, you did.
You did on the light. So in the
mate, welcome along. What do you got?
I was out and about today. I've got the old Fedrus, which is a winery that is actually just down the road from us, and it's a cracking little Pinot Noir, which they've now got
the Pinot, mate. I've got a little bit of Melissa's paddock, the Syrah, whatever. I don't know how to say it.
That's right. Yep, that's it, mate. That's the French way of saying Shiraz for the coffee wine drinker.
Well, I just hacked it all up anyway, so there you go. But anyway, everyone, a few people are jumping on right now, so that's great. Welcome along, gang. Good to see you. A few people all online. So, all right, I'm just going to turn this down. All right, so they're welcome, gang. For those who are joining us for the first time, Andy Fenton, Jason Witten. This is our Friday debrief, our Friday get-together, where we get to chat and talk about our respective fields of expertise and experience. And, me in the property world, Andy in the finance and the share market, equity stocks, gold, you name it. Bitcoin, not yet, but maybe later. But
virtual gold, they're calling it these days.
Virtual gold, yeah. Well, Jason York just giving me a shout out. Said I said it right. He said my Syrah. I said it right. But anyway, thanks, Jace. So yeah. But listen, Andy, I thought taking your lead, mate, with we might sort of do a little kickoff for the day and just talk about. Maybe for people listening in tonight, a little bit of a conversation about, managing yourself. You and I, we run in a few networks of people who push themselves beyond the regular everyday folk, and business owners and property investors. We're not, we don't sort of sit back and wait for life to happen. We sort of get out there and make life happen a little bit more than, maybe others, and that has its toll, and it has its benefits. But mate, maybe tonight might be a good little opportunity for us to have a bit of a chat about, maybe taking care of ourselves in a few ways, and some of the things we've learned over the years, and maybe we can sort of have a bit of a chat about that, because I've got a little sticker here. I like this one. I posted it the other day for everyone. We don't see things as they are. We see things as we are. And a little bit of a tone for the moment, with the second lockdown for Melbourne, a little bit of uncertainty going on for a few of the other states, the borders closing, what's coming up for people, and sort of chatting to my crew only a few days ago, and, a little bit of friction, a little bit of, I don't know if it's a real word, a bit of crotchiness, crotchiness, whatever it is floating around. People are a little bit sort of, not this again, and maybe a little bit of that, awareness of mental health and taking care of yourself. So you led the way, mate. Took a day off today, which is brilliant.
Absolutely.
But as entrepreneurs and people sort of pushing the edge, we've got to make sure we take care of a few things, and maybe we should share a few of those today, maybe to kick off and get ourselves going, mate. So what is it? I might sort of kick off with those listening in. Over the last 20 odd years, sort of been in business, property investing. Tomorrow Shay and I will have been together for 28 years. Tomorrow is our meeting anniversary. I'll do this one. So, you know, those sorts of things for us to all go the distance. What do we do? And, you know, maybe we could, you know, wax a bit of lyrical and share a few of those tips as we sort of kick the night off as we go along, you know. Yeah. So, mate, what do you do to take care of yourself as an entrepreneur and you know, the people around you, mate? So give everyone a bit of a tip. You know, you're always pushing the envelope as an entrepreneur yourself. I know that. You burn the wick at both ends. But what do you do to recover, buddy?
Mate, well, just before we get into it, I'll go through, because it's, you know, been a journey of mine of recent, which so it's very topical for me. But I've got some interesting things to go through later. But I thought, well, while we're chatting about some of the sort of more soft skills, if people have got questions, whack them in the question box, because I know that there's a lot going on around markets and property and all of those things. So maybe we do a little bit more of a Q&A flavor when it comes to the technical stuff today. I do have something to share with you later on, which is, I think, is hysterical. Did you know that there's a thing called the misery index?
The misery index.
The misery index, and I'm going to introduce you to the misery index later on. It's a financial markets index. It's been around for 6 years.
No, really?
It rates countries based on a misery scale. So so the least miserable to the most miserable, and but they're all miserable. There's no escaping it. Everything is miserable.
That's hilarious.
So that I thought was that would be a bit interesting, a little bit fun, just to scan through that and see who's the least miserable and see who's the most miserable and see who's becoming more miserable over the last year. But mate, I think I've shared this a little bit with you know, clients and business owners that we coach over the last week, because I think as you know, when you are running pretty hard, and let's face it, you know, not just in our field, in all fields, but for us in our field, I would have read over 1,000 pages of legislation and interpreted over 1,000 pages worth of legislation since March, which is more than, you know, they probably dropped in the last 10 years, really, as far as significant changes. Meanwhile, you know, keeping up to date with markets and figures and COVID curves and all of those sorts of things, while managing the business just as per normal, plus going remote, plus learning the different technologies, plus like it. And I love a challenge and I love to learn, but I think sometimes the hard part about being in that sort of high performance field and the same was true when I used to play hockey, because I used to play hockey for Victoria and Australia, and was trying to get into the Olympics with that. And then the same with shooting. So I've always tried to perform at a higher level, but the recovery time and the rest and recovery time is super, super important. And what I found over the last month was, yes, we were still doing what we needed to do as a business, but became a bit of an empty soul, I think, Jace. And you know, I was still me, but I was just kind of existing, and then fell into this real lack mindset. There wasn't enough time in the day. There wasn't enough resources. There wasn't enough internet speed. There wasn't enough anything. And
everything was, there was that sort of like cranky about everything. Oh, why is the bloody grass growing, for crying out loud? I mowed it last week. Yeah.
There's not enough water and the tank's bloody full. You know, I think I said that. Oh my God, it's been so dry recently. We really need water, but our tanks are full. So when I snapped myself in that state, I realized I'd actually been in there for probably about 4 weeks or so. And so as routines that I do, obviously I exercise, well, not obviously, but
look at my
gun. Not obviously, I should say. I exercise every morning, and that helps keep a bit of an edge. But it's more the mental game for me. And so what I did is I went back to basics, and this is a book that I keep next to my bed, and it's a bit of an ideas book, but it's also a collaboration of different ideas and different habits that I've learned over a period of time. It also has all of my different mantras in there, which I'll say every night and every morning when I wake up. And you know, some of them, as an example, because I hadn't been using it more recently, I make time. I make the time I need because I control time was one of my old slogans. But what I found more recently was when you do get overloaded and when you are in those heavy seas and those storm seas, you don't try and trim the sails on the boat so the telltales is just perfectly aligned up when you're in the middle of a fucking hurricane, right? You don't do that. As long as the thing is flying, right, that's good enough. And so I think that the big lesson that I really learned over the last few months, and made a massive difference as soon as I learned it, was going back to the very, very simple things. Because I just looked at myself and I was like, I don't have as much energy. I'm getting through the day, but I don't have the energy. I'm not happy, and I'm not I don't have that clarity, that snap clarity that I'm used to having. And so that just went back to the old mantra: I am abundant, I am happy, I am focused. And I would say that to myself probably a few hundred times between getting up in the morning and finishing the shower, and sometimes out loud, which is sometimes a little bit confusing for Magda. And just like, all right, so you're happy, all right, you've said it enough. But sometimes just that self-talk is enough to convince you. And I just happened to fall upon an old Tony Robbins thing, state, story, strategy. And it talks about, and I talk about it a lot with work, it's you can have the best strategy in the world, but if your story that you're telling yourself is a negative story, is a story that you're not going to achieve it, you ain't going to get there. Yeah. And if you don't have a state that is strong enough to be able to change the way that you look at the world and the way that you talk to yourself, you won't be able to change the story. And you need a strategy in order to be able to manage your state and your story. So it's this perpetual cycle. And for me, it really starts with the self-talk. And I took a little bit from all of my favorite, I guess, entrepreneurs and coaches. And I created something which I called Chi for a period of time, which was the clarity, happiness, and energy. And then my team said, no, Andy, you dickhead, that's not Chi, that's Chi. Chi is with an I.
Oh, that stuffed up my acronym right there, didn't it?
And so I went back to this, and I found the book and I read it again, and I break it down into 4 quadrants for me. And so the first one was exercise. Every single day I've got to do some form of exercise, whether it's stretching, whether it's a 15-minute walk. Most of the time it's half an hour, sort of reasonable cardio or weights or something like that, but just anything to keep the blood pumping. Then there was visualization, which is about actually visualizing the day that you want to have before you have it. So literally sitting on the edge of the bed, I'd literally sit there and I'd think, okay, so how do I want to feel today? What do I want the day to bring to me? What do I want to bring to the day? And what's the emotion that I want to be able to feel today? And so I'd spend the time to visualize the day in advance and sort of create the day in advance. Don't worry, it doesn't always happen that way. You can get derailed really fucking quickly. I can tell you that sometimes before you even get to the shower.
Yeah.
Mindfulness, which is all about just appreciating the time when you're doing something. So mine is making coffee. So making sure that when I'm making the coffee, I'm spending the time to actually smell it and be present while I'm doing it, not allowing it to just be that automatic motion that you do. And then social, because probably much the same as you, mate. No, I'm not sure if it is the same as you, but I think that when you're a business owner and you get caught up in the day-to-day bump and grind, if you don't find some way of at least connecting with your fellow man, you can quite quickly, I can turn into a hermit and I won't see anybody other than client and team for months. But there's a toll that it starts to take.
Yeah, it can be quite unhealthy. Yeah. And it's like, like I found that one, Andy, too. Like, one of the things that for me, a few years ago, I realized I always thought, without an analysis, I always thought I was an extrovert. But the real definition of extrovert, introvert, or ambivert, or whatever, is where do you get your energy from, right? Not how you show up in a social situation, but where do you get energized from? So for me, I was always I needed time alone. I needed time away from people to re-energize. But when I'm with people, I quite enjoy their company, but I don't seek it out as my first port of call. And one of the things that I realized that that I was an introvert means I needed time alone, away from others, to re-energize, and then I could come back, rather than being an extrovert. And sometimes being an introvert, certainly for me, I end up sort of preferring my own company. I'll go to my shed and I'll work on my timber work, and I'll go for a walk in the bush, or I'll go out climbing, or I'll just get away. And it's like, oh, that was good, and you can find that you'll isolate, but then you don't end up connecting with the people that you love, or you want to network with, or whatever it might be. So it's pretty important, that human connection. And that's the sort of thing right now. It's interesting. When COVID first came, in and around March, when the lockdown started and whatever, everyone's like, all right, well, we've never done this before. Like everyone's sort of saying, well, we're all in this together. Kind of it's shit, but chin up, we'll get through. And I was chatting the other day, talking about, it's like going skydiving. I don't know if you've ever been skydiving, but the first time it's quite like, it's exciting. It's interesting. Like, I wonder what's going to happen. And then the second time, what's going to happen. You're like, this is going to be shit. This is going to scare the crap out of me. I actually don't think I like it. Right. So it's kind of like the second time with the lockdown and stuff, that mental resiliency and that keeping an eye on things is pretty important to really keep an eye on. Annie just asked sort of what amazing social stuff have we done sort of recently. And, Annie, one of the things that that has been fantastic is being able to participate socially, actually, in the lockdown in a Zoom sense. We actually had, amazing dinners with other people and couples and, people from all over Australia via Zoom like this. And it was actually quite fun. So, we weren't sitting, within breathing space of somebody, but it was quite fun. So, I know a lot of people right now doing Zoom dinners with their families, or Skype dinners with their families. You and I, Andy, we're FaceTiming each other all the time. I prefer to FaceTime and chat to Andy now rather than chat on the phone. We're creating new skills and new ways of connecting and creating relationships, where before, to be honest, I actually devalued those ideas. And now I actually value them way more. I think they're more valuable than ever before, as a tool of connection and, staying connected with people that you love over a distance. And, I think that's kind of cool. So,
and it's got the added advantage that you can just blame the internet when you want to piss off. It's beautiful.
I can't hear you, Andy. I've got to go, man. I've got to go.
Do we do?
But, at the end of the day, whatever works for you. And this is kind of like probably tonight's conversation is a little bit organic around, where we are. But, what I was feeling in the last couple of weeks, because, like I work with a lot of people, Andy, you work with a lot of people. I could feel the heaviness in the last couple of weeks. The first time we went into lockdown, everyone was there was this kind of adrenaline about it, but it was a bit buzzy. But, everyone was like, well, yeah, okay, well, let's do this. But now, there's a bit of heaviness about it. But, swinging back to sort of our world, sort of from a property point of view and an investing point of view, the fundamentals of making any investment decisions in your future have not changed, irrelevant of COVID, right? Irrelevant of first lockdown or second lockdown. Fundamental long-term investing decisions for the future are still valid. Are there short-term considerations you've got to keep an eye out for, or more interestingly, you and I have chatted about before, short-term opportunities to be ready for, and also, making sure we don't estimate our capacity with JobKeeper and other incomes coming in. So, that's pretty important to sort of, do that sort of stuff. So, I think that's important to sort of discuss and get out there for people, as we're sort of chatting about all of these things, just making sure we look after each other, here, there and everywhere. But, Jason York reckons for yourself is drink more of this wine. And I'd tend to agree with Jace, a few glasses of wine here and there aren't too shabby. And Friday nights are our glass of wine nights, which is good. But, mate, so listen, what do you got on the horizon, mate? Like, literally this week, there was a lot of rhetoric in the media for me in my world in and around, the media trying to report on property like the stock market. All right. It annoys the shit out of me. I think I've talked to you about this once or twice before. The idea that you analyze real estate in the same way you analyze, stocks in their sort of, daily, weekly values is I think, frankly, ludicrous. Maybe in the future, you and I have chatted about if there is a platform to facilitate the speed of transaction into the future, maybe that will have some more validity. But for right now, it's a ludicrous concept that you can report weekly, fortnightly, or monthly on property markets, around Australia, because just that liquidity and that process is just not the same. So, this week I did a bit of a shout out to my tribe, my crew, just to sort of reinforce and remind everyone the fundamentals are still here right now. We have the lowest interest rate environment we've ever seen. That's only going to maybe get a little bit lower, or be this low for 3, 5, maybe even 10 years. A lot of people are talking about 7 to 10 years low interest rates right now, which is interesting. Supply chains, the second lockdown in Melbourne, and some supply chain issues for the property market. Wow. It has fallen off a cliff. This month, actually on the 17th of August, I'll send you an invite, Andy. We've got Dr. Andrew Wilson coming along to our mentoring night. He's an economist, Australian economist, does a lot of stuff with the banks and the big institutions. In March when we got him in, it way more robust than anyone. Places like Sydney and Melbourne, but the other fundamentals are still there. And just because we're going into second lockdown, or there's other challenges that we might be experiencing, or we might be getting nervous, doesn't change those fundamentals. But what do you see in the stock market, mate? What's going on for you? The rest of this week, or the week that's just been. One of the guys, the reason I yelled out for the old Bitcoin, one of the guys that I know very well said, all the virtual currencies are having quite a large rally, up like 30 or 40% in a week. Weirdness out there in that space, to be honest. Yeah.
Yeah. Look, that's an interesting one. And because, crypto is still, I don't care what anybody says. My opinion on it is it's a gamble investment.
Yeah, totally.
it's for me, it's a technology. And yes, there's some incredible money that can be made, but there's no real fundamental basis as to why these things perform the way that they do. It was inevitable that it was going to pick up. And so what we're seeing now globally is because the American market's continuing to chug along. So, sorry, let me just take one step back. We've been talking about stimulus for a little while, and we've been talking about the money being injected into the economies. And my comments were, as long as they continue to drop stimulus, then markets will continue to rally and move forward.
Yeah.
Where they are seen to be pulling stimulus off the table, markets will flatten and then dive. Right. So there's another thing that's happening now with stimulus, And so right now we're exactly right. So that's actually coming through. You know, the Australian government have basically shown that they're going to taper off the stimulus, and markets in Australia have just been hovering in and around that 6,000, 6,100 mark in the ASX 200, right? Not a lot of movement, just up and down volatility. Bad news, we'll see it start to drop. New stimulus measures, which we may see from, you know, the fact that we're back down into lockdown down here, then the market will most likely recover or will start to rebound faster. Now, all of the gold lovers out there, and they're gold lovers, I love them. I really do. God bless their rotten socks. They've got one game to play, and it's gold. So they get a little bit warm and fuzzy once every 10 to 15 years when the world turns to shit. And I actually think that it's a psychological coping mechanism. It's kind of like when everybody's kind of miserable, I want to be really, really happy. So I'm going to invest in gold. So be that counter-cyclical type of investment. So the reason, so gold and silver are now taking off. And as a result, Bitcoin and the other currencies are starting to take off. Now, some of the rationale behind this is that there is a strong market belief, and by market belief, you know, that you can see that the American market is starting to price in a new stimulus coming from Trump, and it's likely, you know, he's out campaigning. We know that he's an egotistical, maniacal maniac. Who uses words like very, very good. And actually this thing is a classic. I was watching Bloomberg throughout the day today, just chilling out. And they've started ripping him off. So they've started quoting him in the headlines. So you've got newsflash. Donald Trump says the stimulus will be very, very big. And I was like, oh, that's hilarious. You know, they're literally ripping the piss out of him to his face. But so once every 10 to 15 years, the gold lovers come in and say the US is not going to be the global currency anymore. Now, they've been saying that through every recession and every market crash since I've been alive.
One day they might be right, Andy. You never know.
They're going to be right. Someday they will be right, right? It may not even be in our lifetime, but they may be right. So the challenge with printing more money is that obviously the government's balance sheet is getting further and further into debt. So now the argument is, well, they're debasing the currency. And so as a result, they're saying, well, there needs to be a new standard of currency. And as soon as that argument starts to come out, and we're starting to hear the term the fiscal cliff. Now, for those of you who are wondering what the hell a fiscal cliff is.
It's been bandied around for a while, that one, isn't it?
Yeah, that was the fiscal cliff. We've been raising the level of that cliff since Obama and the GFC. And there was an example back, and I forget exactly which year it was, shortly after the GFC, and they were going to either fire, I think it was 150 or 200,000 public servants. So firemen, policemen, things like that. They were going to have to fire 150 to 200,000 of them. And that was Obama's play to get the permission to lift it up, because they weren't going to have it go any higher. Well, since then it's doubled, right? So it's doubled. And as a result, we're seeing gold, we're seeing silver, we're seeing them take off. So as a result of that, we've seen the digital gold, which is Bitcoin, and these things start to come on the back of that and that tailwind. So, you know, I guess if you're a gambler and you love your Bitcoin, it's probably presenting a really good opportunity to get in right about now, because of no reasonable fundamental reason, but people are talking about it as digital gold. Now, if people start to see it like that, people start to behave like that, and then it'll do one of its crazy things and it'll just take off. But that's effectively what we're seeing in markets. So if we see Trump come out and drop a big stimulus, and the idea is that it's going to be big, then markets will continue to rally over in the US. And I think the same will happen here. We won't rally hard, but we will take a bit of a bump. And that's kind of the position that we're in at the moment.
Well, mate, the Australian economy, like you said, it was actually a few months ago, is is, in the world, is it number 3 or 4 in comparison to many of the other countries around the world. At the end of the day, our debt level is quite low in comparison. I think we were quite lucky after the GFC to be really, riding on our glory days of the mining boom. But, right now I'll do a pop quiz for anyone listening in. So pop quiz, I'm going to ask it because I know there's a bit of a lag here. Which state in Australia right now reported a decrease in their unemployment level? Instead of an increase, a decrease in the unemployment level.
I'm going to go South Australia on that one.
All right, Andy's going South Australia. Anyone else want to have a guess?
Shoot, actually, it could be Queensland.
No, you can't. No, you're done now. Lock it in, Eddie. Lock it in.
I was just thinking because all of these bloody Victorians are buying properties up in Queensland, so we can go into 2 weeks worth of quarantine.
Jace O'Neill said Queensland. Yeah. It's not actually, Jace. Shay said ACT. Dave Lee's got it right. Dave, good work, Dave. Yeah, and he's onto it. WA, gang, Western Australia. So it's really interesting when you have a look around. Western Australia right now is having a little mining run, a little mining boom run. Lithium's still, lithium's coming on track pretty nicely. Iron ore, Andy, you'd probably know better than me, but it's up above. It's above the pre-mining boom numbers. I think it was. So Western Australia. So it's interesting, and this is the part where it's.
Well, I'll just talk to that for a tick, Jace, because this is really interesting, and I got this from a conversation I was having with, and he'll know it if he's on board. I won't drop the name because we might talk about some other details, but. Runs a mining business or a business in mining over in WA, and we're having a bit of a chat. And I said, "Well, that's great. You've got heaps of jobs on." Look, I can't actually fulfill on all of them. And I'm like, "Why is that?" He's gone, "Well, a lot of the people who we normally employed said, you know what, screw this. We've made some great money. I'm going to buy a van. I'm going to travel for a little bit because just get out of the cities and enjoy life." And then they can't get anybody because it's a hard lockdown on the border. So they cannot actually get people because normally they're FIFO, right? Fly in, fly out.
Fly in, yeah. Yep. I've got one of my clients stuck in Port Hedland. He's there. I'm like, I'm locked down, mate. I can't get out. I can't come home.
And it's ludicrous. It's actually ludicrous to think that, the government and the state government is not putting in some sort of measure to be able to quarantine these people in military facilities for 2, 3, 4 weeks, whatever the case may be, and then let them into the mining resources sector because otherwise they're really going to put the brakes on. So I should have got that bloody question right.
You should have got that one. I think I let it out before, and it's Western Australia actually is the highest average rental yield in Australia. Just overtook Adelaide for that one, which is interesting. And it's the lowest house price of the mainland capital cities in Australia as well, average house price. So, really interesting and quite a high, it's the second highest average income in Australia behind ACT. And, a couple of the guys were shouting out ACT, and I haven't checked the ACT numbers actually, but I reckon they might be pretty correct on the ACT unemployment or the employment rates right now because we're hearing from people in the ACT that they can't get properties to rent. There's people everywhere down there. I mean, my rents have gone up. My rent roll in Queensland right now is at a 0% vacancy rate. We've put our rent up on our houses on average $40. So and the point I'm trying to make here, gang, if anyone's sitting in Melbourne and thinking, oh, fuck, the world's ended, fuck, quick jump off a cliff, it bloody hasn't, and this is the problem often with the media and even with COVID now and other times. The media loves to report, endlessly on, Sydney and Melbourne. But, there are a few other states around, and there are a few other cities, even though they are the big ones.
They only count now, mate, because we've basically shut the other two down.
But Jason O'Neill just did a shout out there. I think we talked about last time. Western Australia tried to secede from Australia. Do you know that? They gave it a nudge.
Just nuke the pipeline that comes down from Argyle. Just drop a little bit of a match into it, and poof, we'll end up with a big crater.
It's interesting. But the thing is, and this is why I'm really, like I talk about this all the time. And I did a little Facebook Live on it the other day. One of my first books that really got me into investing was Rich Dad Poor Dad, Robert Kiyosaki. And, I read his book, and then, he was fucking rabbiting on about, wealth psychology. If you can't, if you don't think properly, and if you haven't got your psychology, it's 80% of it. And I thought he was full of shit. I was like, piss off, you bastard. Just give me the secrets. Like, you want me to buy your next book, you prick, just tell me how to do this. So I was a bit cranky at him, actually. And, it's interesting when sitting here now, 20 years later, once you know the nuts and bolts, you think the nuts and bolts is everything, right? Once the you tweak that and you got a little formula, the rest of it is, it's that 80%. It's keeping your shit together, right? It's keeping your shit together, not doing anything stupid, not doing anything based in fear because you're worried about losing everything. It's this balancing act. It's a head game. It's a psychology game about wealth and money, really the long-term one. So, a good mixture of psychology, strategy, and action, really, at the end of the day, is the reality of it, mate. So,
it's funny, mate, because in saying that, I'm just going to see whether I can bring up something to write on. Here we go. Yeah. Because I'll just put myself in there so you can see my beautiful face. There we go. So you've got and I think I've talked about this previously in Wine and Wisdom as well, but you've got this sort of cycle, and I've now started. Shit, that's not right. Can't bloody do it. Too much wine. Too much wine so far. So I used to draw this as markets, and clearly I'm not a drawer on any stretch of the imagination. But if you think about this as sort of market cycles, and the reason why I draw it as the infinity is because these things just keep on happening in perpetuity. And the normal psyche, right, is that when things are up here, then you're super happy and you're buoyant and all of that sort of stuff. But in that and the converse is true down here, you're quite miserable. Now, I've never done that before, but that actually looks quite good, right? So when you're down the bottom,
I know what you're saying, though, because at the end of the day, I call it bank account emotions, right? It's like you look in your bank account, and when you got money in there, you're like, woohoo! And then you look in the bank account, there's nothing in there, you're like, and you run your life on your bank account emotions. Like you got this pendulum, they're like, hey, we've got money. It's all good. And then you got no money, you're like, oh shit, no money. And, it's exhausting, it's insane.
And look, I think the game is, and I've said this a few times, the game is when you start to get into this zone up here, or when you start to get heavily into either of these zones, right? Whether it's, that high positive, high negative, one of the things that we need to do, both from a psychology perspective, a relationship perspective, and a finance perspective and an investing perspective, is when things get to that buoyant time where everyone feels like they're taking the happy pills and they're all vibrant, and the taxi drivers are giving you advice on property and shares and everyone's making money. You kind of need to flip that psychology a little bit and start to maybe not go completely negative, but just start to become a little bit pessimistic, or at least realistic at that point in time. Sort of flatten yourself out and don't get sucked into it too much, because that's where you can really do your dough. You get, we call it a rational exuberance, right? And nobody loves that person who is just super freaking happy all of the time, because we know that those people are going to crash at some point in time as well, right? So, but the converse is true as well. When you're down here, you need to start to look for that opportunity, and you need to be aware from a psychology perspective, and managing our state. We need to be aware that potentially there is a suppression of our state. So what do we do to start to become more positive about it? And you look for the positive. And when markets are down, you've got to look for the positive as well. And it's in searching for that positive that you'll actually start to find it, right? Because when you're super negative, you block out everything. And then all of a sudden you go, oh, you look back and you go, fuck, why didn't I see that? Why didn't I see that? That was so obvious that was going to happen.
Yeah.
You know, the prices had crashed down. The reason that you don't see it is because you're filtering the world through this negative lens. And you've got to try and turn that turn that frown upside down and start to look at things from a abundance perspective, or at least an opportunity perspective. And I think that it matches really well emotionally as well. You know, when you're super, super excited about things, you need to kind of temper yourself before you start to make any lifelong decisions on it. Otherwise, I'm sure that a few of us have made some pretty drastic decisions under the feeling of intense amounts of love or intense amounts of emotion. And it seemed really, really good at the time. And then afterwards you kind of go, oh, why did I do that?
Not great. Well, mate, you know, there's a
and when you're doing that, your mates are going like this. They're just going, "Oh my god!"
Mate,
and you're going,
going
"Mate, you're all stupid. You don't know what's going on." But they're the only ones who can actually see what's really happening. And they're like, "Oh no, this is going to be a train wreck."
Well, you know, I was chatting about it actually this week. An awesome book. There's a fellow called Sean Accor, and he does a TED talk. It's called Amy the Unicorn, but he's actually a professor from Harvard, and he did a happiness study, and it was really interesting. So he wrote a book called the Happiness Advantage. So basically, he wired up people, chemically, with the brain sensors, the whole thing. So, and basically, the 30-second version of the book basically is this: when you consume negative information, like negative input into your environment, and he said most people in the morning would get up, the secret of happiness in the workplace. Anyway, I thought it was called the Happiness Advantage. Shay, anyway, Shay's got me there. The secret of happiness. Basically, the gist of it is people would get up in the morning and listen to the news, and that would flood their bodies with adrenaline and cortisol, because the news is full of, rubbish information, fear, ignorance. So when your body is flooded with adrenaline and cortisol, your intellect, your ability to think clearly is significantly impaired, chemically impaired, because you don't need to think. You just need to be ready to act. And your brain kicks into what's called a fight and flight situation. And so basically what he showed, and he was studying these people at Harvard University and all of these sorts of things, is basically most people spend most of their time intellectually impaired chemically, between 40 and 80% of their true capacity, because of the information and media they consume, causes their fight or flight mechanism to kick in, and their inability to manage and dissipate that chemical stupidity, basically. And on the opposite side, like what you were saying, Andy, when you're sort of full of the old love hormone or the other thing, everything's going great, success is a poor teacher, nothing can go wrong. I bought Bitcoin and it doubled in value. I'm a genius, right? again, when those chemicals are flooding your body, your intellect is impaired also, right? Like chemically impaired, it's scientific, right? So I nicked a bit of the Kerwin Ray emotional pendulum. You and I know Kerwin very well, and I sort of applied it to the investor pendulum, right? So in essence, on the old, negative scale, you get sort of fear and frozen, and you're chemically, and your body is producing adrenaline and cortisol. On the other side, you're excited, overconfident, chemically stupid. It also, you're high on serotonin, oxytocin, and the dopamine, right? Again, your intellect is impaired. Your capacity to see things, dangers is impaired. And a lot of people live like this, between the sort of the fear and frozen and the excited and overconfident, this chemically stupid, two different ends, and they get emotionally exhausted, physically exhausted, right? Michelle was sort of giving Jason, saying ignorance is bliss. You're right, Jay. Sometimes ignorance is bliss, brother. Yeah. We should have gave you the warning, red pill or the blue pill. If you take the blue pill, well, we're down the rabbit hole a bit. But and this is it, right? So how do we end up consciously creating our calmness to make good quality decisions? And I've got a bit of a matrix on that one, right? So I believe you need to get educated, consume good knowledge, get some facts and develop some understanding. I 100% believe in coaching, mentoring, and accountability. Absolutely imperative. And you know what I should put in there, actually, right now while we're chatting? I think I need to put in here a mastermind group. All right. So mastermind of peers, in your industry. That's what I think. You need to have a plan, create some strategies, tactics, implement and review. And you absolutely need personal development, self-awareness, emotional IQ, and stress capacity, right? Because, you and I have chatted about this a few times, Andy. Business, investing, life, it's a full contact sport. No one gives a rat's ass if you're feeling great today, you show up for business. The rest of the marketplace is going to roll over you, mow you down, all right? Property investors, oh, sorry, guys, I don't feel great today. Can I not make it a decision about my, my loan or my tenancy or this or that? No, the market doesn't care. It's it wants a piece of you. And so your ability to operate, I call it in the maximum output zone. I don't know if anyone's into, cars and whatever, but, you've got a tachometer in cars, and, a car, like a vehicle finely tuned, is able to go its fastest when it's almost at a red line, right? It's almost at red line. That's when we're fastest. That's our maximum output zone. But you can't stay there forever, because you will explode. The engine will overheat and blow up. It's designed to be there for a while. So then, what are the gears that you run at? If this is neutral or not even started yet, gear 1, gear 2, gear 3, put that one in there. And this is flat out on the freeway or whatever it is, you got to understand what that is for you in your stuff, whether it's business or, investing or whatever you do, the ability for you to have that maximum output as we go along. But, you got to make sure you look after that stuff. So, it's an interesting one, Andy, it's something that you and I have learned, call it on the job, we didn't start out this way.
That's interesting. Yeah, we did learn it on the job because we got fucked a few times.
Yeah. You get poleaxed, you're laying there after being hit by a truck going, fuck, what happened? How can I not have that happen again? It's an interesting one. But, for those listening in, I suppose the sort of the theme of this evening's chat, our field of expertise, but it's our experience about being able to go the distance, and being, as healthy and as calm as possible in our worlds when we make decisions, because they do have impacts. They have immediate and long-term impacts in our wealth, our psychology, our health, our wellness. They're not to be underestimated, the impact they can have, positive and negative, into the future. Taking care of yourself like you've done, mate, today, you had a bit of a day off, is certainly part of the mix, to make sure you make good decisions as an investor and take care of yourself,
Absolutely. And it gives you the ability to, that neutral zone, or when you just balance yourself out. Some people say that it allows you to tap into your intuition, right? But there's also studies that talk about this thing called thin slicing. And Shay put me onto this book, actually, that I've been reading more recently. And thin slicing is a term that they give the subconscious brain power, right? And its ability to thin slice information very, very quickly and just send it into your prefrontal cortex, so that all of a sudden you just have a feeling about something, and it could be interpreted as an intuition. It's like, oh, this isn't quite right, or this is bang on the money. And I think we've all had those, and we then question it. It's like, why did we feel that? And generally when we get into those zones, it's because we're balanced. And we don't get that thin slicing when we're super pissed off or super angry or super negative, or so freaking happy clappy that you're going to even piss off the most evangelical, James Brown type person. So being able to moderate that energy gives you the ability to be able to tap into that subconscious computational power. And then it's up to you whether you choose to be able to listen to that and understand exactly what that is. And one of the examples that they talk about in the book was actually a Roman statue made out of marble. And they did this museum's very, very first big exhibition, and got all geologists to do tests on the marble to make sure that the marble was the right age, and did all of the quant stuff and all of the scientific research, which backed up his belief, because he was high positive, wanted that to be his statue, wanted that to be in the museum, right? And then he got a whole lot of specialists in, not the scientists, but a whole lot of specialists in statues and art and so on and so forth. And immediately the first one, he said, "What do you think?" to the first person. They've gone, "Oh, it's just clean. I don't know why. It just feels too clean." And the other person said, "It makes me feel sick." And that was that were the first two comments that came into these specialists, and they couldn't justify it. And what this led down was a track where they did a lot more research. And what they found were all of the specialists who came in and were very, very neutral when they came in, they had these immediate reactions, which were quite violently, one of them felt quite violently ill as well when they saw it. And it was the subconscious brain thin slicing the experience, being able to take in all of those, whatever it is. I think it's some billion bits of information per second is thin sliced in the brain. But if you're not able to sit there and sit in a calm state, then you're not going to be able to get that information. And as business owners and investors, when we're not aware of when we're going off track and when we're in those low moods for a period of time, then we're missing all of that intuition that makes us sharp. And when we're missing that, then we're missing, really the opportunities and the perspective that balance actually brings. And mate, from that maybe we can jump into the old misery index off the back of that, because
mate, jump the misery index. We had a question from Emily about the book. It's from Malcolm Gladwell. What's the book called?
Malcolm Gladwell.
Do you know the book?
Oh, Blink.
Blink. Emily, the book is called Blink by Malcolm Gladwell.
See, there you go. I think I've
blinked it.
Yeah. No, I haven't got it in here. It's next to my bed at the moment. That's the one. Cracking read. Really, really good. Really interesting read. And I I think we've got a few questions which we'll answer as well. We had a few responses to the train wreck as far as, yep, that was my first marriage. So thanks, guys, for participating. We'll come back to the questions. I know Harry's got one in there as well. But, mate, I love sorting through data, and I came across this recently. So check this out. And, you know, talk about economists trying to make shit up. Right, so this was something incredible. So this is actually the misery index. Right? Jesus. Can you believe it? The misery index, and effectively the misery index. It's a Bloomberg misery index. It's the 6th year that this has been around. It relies on the age-old concept that low inflation and unemployment show how good a country's residents feel. So this year's scores are based on Bloomberg surveys of economists' estimate for what they think, 2020 price growth and joblessness in each economy is going to be compared to the values of last year. So basically, it's a measure of inflation over here, right, and the unemployment rate down here. And so if we have a look, poor old
South Africa got a 35% unemployment rate. Is that right? No.
South Africa, yeah, but almost wow. Up there.
Holy moly.
And they're the 3rd most miserable country in the world, apparently. So Argentina was the 2nd most miserable country in the world. I think that's purely just because they lost the World Cup. But, so the economists must have just loaded them a little bit there. And so it's been interesting, though. Have a check at the and I love it how it's not the happy countries. It's just the least miserable.
The least miserable.
It's not the best you can possibly do is be the least miserable country in the world, which that's just kind of.
Isn't that the old glass half empty, glass half full? Okay.
So Switzerland number 4, Thailand number 1, funnily enough, but I think that Thailand distort their employment figures a little bit that helped them get that number 1 spot. Know. It's their one thing that they're chasing for in their network is to become the number 1 least miserable country in the world. So that was the standing last year. And if we go to the expectations moving forward, which I think is interesting. So this article came out because America has actually dropped in this index further than any other country has ever dropped since the index has been around. The title, I think, was US worse off than Russia, Mexico in 2020 economic rankings.
Wow.
So the US is projected to see the worst reversal of its fortune this year in a ranking of the global misery index, underscoring just how much havoc the pandemic has fought. America fell 25 spots from number 50 to number 25 in the misery index, which tallies the inflation and unemployment outlook for next year based on Donald's leadership. Thankfully, Australia doesn't really feature too much in the misery index here. I think that this is one of the few indexes that we've managed to get out of. But this is really going to be quite true of many of the countries around the world. But it's interesting here as far as just the depths of the unemployment rate that the US is actually facing based on economists' expectations and the employment rate rising relative to everybody else, which sort of begs the question, has it just been that there's been less employment statistics everywhere else? Well, no. So the projections actually, as far as unemployment rates in the US, really, really dire stuff.
It's interesting when you dive into that stuff too. And I haven't done a lot of stuff in America, but certainly, a few times that I've seen, the gap, the wealth gap, the average wage gap in America, the bottom wage has been the same for like 25 years, like as in, in proportion to, but the higher, the wealthy have like exponentially, like 1,000 times more. So it's, it's an interesting thing, economically, it's in for a bit of a shake-up and certainly some interesting times in, those worlds. I mean, there is a concept that, at some point, the economies of, the Asian economies and India and so on, I mean, their population is just, significantly bigger than, the European and, the Americas and other economies around the world. I mean, they're bound to become, economically dominant at some point in the future, that's almost an inevitability. What does that look like for us all, as we roll into that future, as we go. But what were some of the questions that you had after, recovering from our misery index?
So, mate, I just thought I'd bring up the misery index because I know recently you've been campaigning to get on the political trail to represent the small business parties of Australia. So I
tell you what, I think I might beat that drum. Yes.
Your 21 campaign slogan can be vote for Jason and I will make sure that Australia becomes the #1 least miserable country in the world. I thought that might be a cracking slogan. So there's Harry came in and said, Fenton, what are your thoughts on investing in esports? I think it's only going to get bigger, maybe even bigger than live sports. Mate, I reckon it might be too early to call as far as esports overtaking sports, but certainly if you have a look at Tencent, if you have a look at starts with a Z, I was just reading up about them today, which is an online apps company, a gaming company. Actually, I'm gonna have to chat about it next week. I'll have to do some research on it because there's this thing called super casual gaming. Right? It's a concept now, super casual gaming, and that's like when you learn how to tie knots on games and stuff like that. It's just a super casual game. But what we're seeing is let's say Call of Duty just came out. The new Call of Duty stock price is up about 10 or 15% on the back of that. Like, it's logical to think that anything that's going to entertain people right now that is a listed company and that is at the peak of their at the top of their game, they're going to run reasonably hard because people are going to be consuming that at rates that they will never ever see again. So as much as, yes, Harry, I reckon it's a great place to be, it's a short-term play for now. And then I think we will see the re-establishment of that over time. And that'll just depend on the social implications of COVID and things like that. Because where people can't go and watch a live game, then you're probably right. People wouldn't mind actually seeing Michael Jordan doing a 4-360 bloody slam dunk from half court or something like that. And I think that could happen, but I think that there's probably more of and this is just my opinion, I think that there needs to be a social change, and that'll either be longer time of shutdown, or it'll be as the next generation of kids start to push through to adulthood. And then, yes, later on in our lives, we might see a massive, massive increase. But I think short term, we're going to see some really outstanding numbers by a number of these gaming companies. And we already have seen some incredible numbers. But like the CEO of Disney said, and Disney just came out recently with their numbers, because it's been reporting time over in the US. And their numbers are obviously down, several $1 billion down for the quarter because their parks have been closed. But their subscriber rate for Disney was through the roof. Right, keeping up with Netflix and Stan, subscribe rate was through the roof, and so the investment actually held ground, and so everyone was banging on about it. And the CEO said something just really pragmatic at that point in time. He's gone, yes, we've seen unprecedented growth, and we've got to find another word from unprecedented because it's just getting used too much. We've seen outstanding growth, but we've got to factor in the case that is probably going to be as high as it's going to get, because there will probably be no other time for the rest of my life where we're going to see as much captive audience almost by force. And I think that
by force, right? Like, shit, what do we do? Get the kids Disney.
And we have to start to think about this. And I'm going to use a very inappropriate analogy, but I think it's appropriate, but it's a heavy analogy. It's like heroin, some of these gaming things, and I don't just mean for kids. I mean for everybody. the designers of these games actually have people hooked up to machines to try and trigger dopamine responses in the brain.
100%. Yeah,
to
that's
keep
part
you
of the
hooked.
design. Yeah.
Right.
Yeah.
So this is crack, this is heroin. And so, yes, we're going to see a massive increase in these stocks and, massive increase in usership and hopefully, some great results. And then we'll see a tail. But I think that the social shift will actually come down the track. But I think it's a good question. Like if you wanted to try and make short-term money, I think you can go into that gaming sector or anything online. But as soon as they lift and people have to go back to work, then their usership will actually shrink just by default of the world going back to some sort of a new normal.
Okay, yeah. I've got a question from Jace O'Neill here. He said, gents, what do you think is more stressful, trading shares or property? Investing / purchase. I can give you my 5 cents worth. I think trading is the most stressful activity you could participate in, no matter what you're doing, whether it's investing in shares or property. I certainly believe the idea that if you want less stress in the activity that you're up to, a buy and hold, set and forget, strategy is one that you'd invest in. I encourage most of my clients to get a friggin' hobby. Like seriously, leave your properties alone. Like I don't even want you to look at them. Once you've purchased them, really at the end of the day, once you've got the size of your portfolio that you want, if you want to buy 5, 6, 8 properties, that's your portfolio acquisition. If you reduce I was playing around with this today, Andy. To get a $25,000 positive cash flow income from your property, if you buy your property at a 90% LVR and your property is renting at a 5% yield at the start, your rent's got to go up 50% over 10 years. And if you can drop your LVR to 70% in that period of time, you'll have a $25,000 a year passive income from your property. So the cash yield, not the yield against the value. I would say, Jace, at the end of the day, don't worry about trading stuff because that is a stressful activity. I would give my money, if you wanted it traded, to a professional, and that's their job. And I'd give a small amount to someone and, let's see what happens. But I would buy and hold and leave alone. That's what I would do. What would you do, Andy, in the world of less stress, better outcome?
It's much the same. Like neither of us are going to answer the question directly, I think, because the key is the word you've used that's triggered Jason and I is trading. And what I know and what I can tell you from working at the very, very highest level, globally, is that, the hedge fund managers of the world, the real hedge fund managers, and these are the guys who have the brains, who are watching the screens glued to them, who have decades, sometimes multiple decades or many decades worth of knowledge behind them. Intuition, they can thin slice when they see things coming in their brain and be able to see these things. They target about a 15% yield for their clients, and quite often they'll get above 15%, but generally once they hit their 15% for their clients for the year, then they will just go back into a more defensive zone, and then they'll become less stressed about the trades that they make. So that when I think about trading, that's what I think about. And when I think about trading, I say that you can play in the equities market, and I think it's the suitable terms. Like if you want to get involved, play. Don't think you're going to be a fucking expert because you read a book. Like it's insane. You may get it right, but what I can promise you is eventually, like you will get it right until you don't. Right. And it's just like skydiving for me, I loved it. I did skydiving, but I was always scared of it. And then I just kept on doing closer dives at the ground, closer swoops, until I started to hurt myself. And eventually you get it wrong, and then you're on the pavement, right? So if you want to play, but I understand that you're playing, you're dabbling, and you're there to have fun, and you're there to take an interest and a participatory sort of interest in the game, so to speak. But I think you can do both with a strategy. And so my different take is, we would buy and sell property if we had a strategy behind it, right? So what's the reason what we're buying a property? Maybe we're going to, because your top marginal income. So maybe we're going for the depreciation play with the hope of a little bit of capital uplift, but mostly just a great yield, significant tax benefits, and then we roll that strategy over again. And for me, then that isn't actually all that stressful because you've got the strategy behind it. And strategically, the game doesn't change unless the government changes the playing field, the rules of it. And then I kind of think the same thing from an investing perspective. You set a longer term objective and you strategize your entry into the market and you strategize your entry out of the market. And then strategically you adjust the tilt, which I refer to as that trimming of the sails, right? So you go, all right, let's strip out the volatility by taking on a little bit more commercial, industrial, logistical property at the moment. Okay, America has been super red hot, but we reckon something's coming and we've made a shitload of money out of Apple and Amazon. Like, let's take some of that off the table, right? If you've made 50%, take it off the table and be able to reserve it. And so I don't know if that answers the question. I think strategically...
You brought up an interesting point though. Like, for me, often a lot of people overlook when they invest. And I've done this a few times, like, okay, let's say it costs you $75,000. Right now, I know for most people to get into a $500,000 property, including your stamp duty and your LMI and all your expenses, $75,000, if you can borrow at 90%, you're in, right? 75 grand is what you need. Now, if that's equity or cash, it doesn't matter, but you're in for 75 grand to do a property deal at 500 grand. Now, that property, to give you that $75,000 back, right? This is, I look at things a little bit differently sometimes. It's like 100% return of my investment capital back in my pocket. So it's only, that property has to increase $75,000, right? That's all it has to increase. So I think that's 12.5%, right? The property value has to go up 12.5%, and I can increase my loan. I can top my loan up to release that $75,000. That 75 grand is back in my pocket now, back in my equity, back in my cash account, back in my offset account, wherever I got that money from to start. Now that property, any return from that property onwards, Andy, the calculation, I put zero into the deal. What is my return when I get $1? Like, is that an infinity return? Is that like an endless return on money in the deal? I've gotten zero in, I'm getting money back. So your return is, as a percentage, significant. So, you mentioned it there before. It's like, take some money off the table. It's a very smart strategy. Once you're in a deal and it gives you your money back that you put into the deal, and now that property, and if you do it right, you have to understand the cash flow, but it pays for itself and has some left over and some tax deductions. So it gives you 2, 5, 10 grand of positive cash flow in your pocket. It's an endless return. It owes you nothing. You own a property for free. All right. And I'm writing a book right now, and I chucked up the title, and I was going to call it Rich Dad Poor Dad, but someone said it was too close to Rich Dad Poor Dad. What do you think, Andy?
But I reckon you should put invest in property, Australia's #1 least miserable investment.
You'll be the least miserable of investors. I love it. Yeah. Well, anyway, if anyone got an idea about my book title, chuck it in the chat. So I'm thinking of from debt and taxes to wealth and wisdom. That's what I'm thinking. Maybe we'll call it from debt and taxes to wine and wisdom. But anyway,
I'm so not creative when it comes to the naming.
We need to drink more wine, Andy. We need to drink more wine. This is not my forte. Anyway,
I was thinking of like inflation adjustment housing or something like that. Like, geez, scintillating thoughts there, Fenton.
You are such a banker. Look at hell.
You should name books for a living.
Mate, listen, I think we've done over an hour tonight, which is good. It's been good to chat, and I think for me anyway, it's been good to have a bit of a yarn. Hopefully everyone sort of listening in gets a little bit of the gist of what we're trying to say tonight. Is like, look after yourself. Don't, like, COVID is a challenge, a problem. It's stressful. You've got to take care of it right now, but it's not forever. Don't over dramatize the future because you don't know what's going to happen. Take and don't make any decisions under pressure and stress because it's not a great place to do it. Certainly from an investment point of view, selling, buying, all of those sort of things should be done when you're refreshed. One of the things that I've done forever is if I haven't felt 100%, in business, I'll leave that till tomorrow or next week. I'm going to take the weekend off before I say yes or no to that stuff. It's an important thing. You don't have to rush these things, Shay's come up with a good one. What are you waiting for? ? Oh, I like that. Darling, you're good at these things. That's my wife. She's there. But anyway, mate.
I think you're dead on, mate. And probably just to bookend that is, I always think about it. It doesn't matter what we're going through, whether it's a relationship thing, whether it's an economic thing, whether it's a hardship thing. There's two things that we can control, and it's the self-talk and it's the self-walk.
Yeah.
Right. So the self-talk is ultimately all about, the story that we tell ourselves, because ultimately the stories that we tell ourselves are going to dictate the feelings that we feel about the day. We create our own psychological construct of the day by the way we talk to ourselves. So when we become aware of it, we adjust it. And our self-walk, which is, it's a bit of a pun, but getting some physical activity, whatever that is for you. For some of us, it's going to be boxing. For others, it's going to be a walk in nature. But you've got to fire up this and you've got to fire up this just in the way that works for you. And they're the two things in our life that we can control. Absolutely, 100%. And none of us have got any fucking excuse of not being able to at least try that. And so all you need to do is to build a small strategy that'll work for you. But if you focus on one, creating the talk that you need for your life, and then being able to inject some walk into it, then you can walk the talk, right?
Mate, love it, brother. That's a perfect ending. I'll give that a standing ovation. Let's do it. Mate, as always, mate, absolute pleasure to hang out and chat. Hopefully everyone's found some value in one or two of those comments with a little, like you said, mate, more wine than wisdom, but hopefully there was a bit of wisdom.
Sometimes we need to do that.
All right, thanks everybody for dialing in. Great to chat to you guys on a Friday. And Andy, brother, have a good weekend. And for everyone listening in, everyone have a good weekend too. Take care. All right, Jane. Bye-bye.